All right, good afternoon, everyone. Thank you for joining us. Apologize for the technical difficulties getting started. For those of you who don't know both of us, my name is Patrick Chester, Patel, partners in Patel and Chester. And this afternoon, we're going to be talking primarily about the CARES Act loans, but as we get on, we'll get to a point for questions. If you have any questions about the legislation that's passed over the last couple of weeks, please feel free to ask them. Don't have to limit it just to these two specific loan programs. As mentioned, we are going to be focusing on in-depth discussion of the two loan options under the CARES Act and the requirements thereof. We're hoping this will provide a little more clarity and group settings. We can get through some of the common questions that were asked and hopefully help you all out with that. I do want to stress this is based on our best understanding of what we're seeing so far, and there's a lot of information that's continuing to come out and change pretty much on an hour-by-hour basis. So we're giving you our best understanding. Don't take it as legal gospel, please, because it is not. Things may change. It's just our best understanding of what we've got right now. Turn it over to Tim.
So one of the things we're going to do real quick is, before we start, one of the things, everyone please hold on. Now that we've stopped, can everyone make sure that the chat doesn't start? What we do is we're going to have a moderator come in so that we can answer all your questions through the chat. But what we're going to do first is we're going to go to our website, and I'm going to share. And as you guys come in, just know that we're going to pause because every so often we have to keep admitting people. But the share screen of what I'd like to do first is I'm going to take you guys around our website so that you guys understand what we're doing. We've set up this COVID-19 page, and once you go to it, the big thing is you're going to see Unemployment CARES Act, deadlines, the first relief. Today we're going to focus on the CARES Act. There's two main parts for the loans that everybody signed in for. There's the Paycheck Protection Program, and there's the Economic Injury Discovery Program, or Disaster Program, sorry. And that's the one that has the $10,000 EEIG grant. What you're going to see is, as I scroll down here, there's three main things I want you guys to see. I want you guys to see the PPP loan application. I want you guys to see that there is the economic injury discovery information with the grant, and this is for the application. But what we've done is we've set a special link for Business Owner's Guide. If you guys have questions on which program is better for you or what you need to do, this is where you want to be. Right here, you can clearly see it'll pop out and it'll give you a question. And you can go through this 11-page pretty much summary. And then the SBA, we're taking you directly to the site. This application right here that says Final Borrower's Application, this is the 4th edition of it. So if you filled out an old one, you may want to go back on there and refill it out before you submit to the bank. This Paycheck Protection Program, this right here is also something that just basically detailed out some more information last night. So with that being said, that's our website, that's the applications, and as you can clearly see, I'll open them up for you. This is the applications you can fill out and save in PDF with electronic signature, and this will take you directly to the guide for the disaster loan. Remember, there are two independent loans. So one of the things that I want to do and that I want to share with you guys is that the loans themselves are two separate loans. Currently, we're having a little bit of difficulty to get back to us and stop the screen share. So we'll keep talking and allow this to continue. But just go ahead and, oh, there we go. All right, we figured that part out. Sorry about that technical difficulty. And I know a lot of you guys have used this, so you guys can help us go through it. But the main thing is, what I want to stress is the title of the loans is called Keeping American Workers Employed and Paid. So understand, if you're going to take the PPP loan out, the main intention is for you to keep these people employed and paid for the 8 weeks following receiving the money. That is probably the most important thing I want to say, because that's going to depend, that is going to have determinations and calculations for the loan forgiveness. It's tied to that theme. What we've done is we basically set up a few questions that we're going to ask so that we can clarify some things, and then we'll go into the chat part where we answer your questions. So the first question I'll pose to Patrick, and then we'll answer is, can you apply for only the $10,000 economic injury grant without applying for a loan?
Sure, and as we're going in this, just to clarify, these are questions that we've been getting a lot, so that's why we're kind of going through them just to hit the common points. So, can you apply for the grant and not the economic injury disaster loans? The answer is no. You can't apply for the grant by itself. It's part of the EID loan application process. You have to go to the SBA site directly, fill out that entire application, and then at the end, it will give you a simple checkbox that says, would you like to receive a grant of up to $10,000? It doesn't give any point where you can ask for how much of the grant you want. They will just simply somehow at SBA calculate, okay, you filled out this application, you've requested up to $10,000 of advance. We will evaluate it and decide if we're going to give you some, all, or none of that. And to date, they have not provided any clarity about how they're going to be making that determination. All we know is you apply for it, and then they have a couple of days to answer you. I believe it's 3 days.
I think it's 72 hours to get you the money or deny your request. And then the loan, I believe, you will get the loan application that will have more details, and then you either accept or deny. Those are some of the details that haven't been ironed out, but I know it's 72 hours, and then you apply for the rest of the loan.
The next question that we've been getting quite a lot, I will toss to Tim, is can you qualify for both the PPP loan and the EID loan at the same time?
You can. So you can qualify for the PPP loan and the economic injury disaster loan. What's going to end up happening is this. One thing that we will, so the short answer is yes. I want to talk about a few wrinkles in the system that people need to understand. Number one is there's a clear overview that says that expenses cannot be duplicated for the loans. And we'll go into that in a little bit, but I want you guys to understand that expenses cannot be used for each loan that are the same. The other question is be careful, because that EEIG, that $10,000 grant, we believe that when you apply for forgiveness, what's going to end up happening is you're going to check the box that says, yes, I received the $10,000, and they're going to reduce your forgiveness on that loan calculation by that amount. So essentially that's going to be a wash. So that's the two things that I want to stress with the book, everyone asking for two loans. Going forward, another question we're getting all the time is, how does unemployment, employees and employers sending people to unemployment, how does that affect both of these loans?
Okay, jump on that one. As it's different for each. So the economic injury disaster loan, it does not appear that unemployment is going to affect that. That one's going to be more for your general business operating expenses, and they're not factoring in unemployment into any of the calculations there. For the PPP loan, it's going to be a very different story. The entire calculation of forgiveness for the PPP loan is based around how much you're paying your employees. So when you go to apply for the loan, they're going to give it to you based on your previous payrolls. Exactly what? We're still working on the details of that. Then once you receive the money, you're going to be spending it on the things they allow you to spend it on, the payroll, the rent, utilities, and mortgage interest. And at the end of that period, you're going to apply to them for forgiveness. They're going to look at the salaries you're paying out and compare that to the salaries you had in the past. And based on that ratio, among other things, they're going to decide how much, if any, to forgive you of this PPP loan. So if you're putting employees on unemployment and then you get the loan and the employees are still on unemployment during that 8-week period after you get the loan, you're potentially going to run into forgiveness trouble where you won't get it because your payroll has declined. People are still on unemployment.
We just want you guys to be careful, because remember, everything's going to revolve around your past payroll, and I'm just reiterating this for Patrick. It's going to revolve around your past payroll, and it's going to revolve around exactly what are you doing and how are you keeping yourself organized for the 8 weeks after you get this money for PPP. Patrick?
Yep. Next question that we, again, been getting a lot. If you have multiple businesses, can you apply for these loans in each business, or is it tied to the business owner?
From a technical standpoint, when you go online, you are going to be able to apply. Well, first, you can only apply for PPP if you have payroll. That's the first thing. But what we want to talk about, you can apply for both. How that's going to work and how that's going to shake out, we're not exactly sure. And we're going to talk about things to watch out for later if you apply and when you get the money. So I'm going to skip over all those questions that people have for the money part and what to do. But one of the questions we're not unclear about is, what about people who have a company that operates and they rent a business to themselves? For instance, our CPA firm. We have one company that runs the business and another company that owns the land. How are you going to do, how are you going to apply for everything? What we want to explain to people is, one thing I want you to be careful about is, remember, you're signing all these documents saying that you know you're going to have an economic impact. Well, if I'm applying for a loan that gives me money to pay the rent, then is my rental company really having an economic impact? You guys need to consider that. You need to understand that. And those are things that are unclear for now. I think I've answered the occupation of both of those.
Just to summarize it a little bit to make sure we're getting it. If you have separate business entities that are not related, it does look like, yes, you can apply for both.
Right.
It's when it's a interdependency, that one is renting from the other or one is dependent upon the operations of the other. That's where we're concerned that there could be potential issue.
Oh, perfect example. The example of that is, I run the CPA firm. However, my wife has her own business. 2 separate businesses, PPP loans, go forward. I will tell you one thing to consider is when you're doing the PPP loan, question 3 is a little bit tricky. It's asking for, what was it, Patrick?
Common management.
Common management. Common management and common ownership may be 2 separate things. We don't have a clarity on that yet, but we're looking into it. One of the things I'm going to share a screen before I ask this last question, because this is, to me, extremely important on what we're looking at. And how that's going to work is this.
Yes, that's right.
Is the question I have is, what should I do with the money when I get it? And what I want to be able to do is, when you get the money for either loan, what I want to make sure of is that you keep those loans completely separate. So let's say we apply. We apply for the PPP, we apply for the economic grant and loan. What I'm going to do is I'm going to take that money and I'm going to create new bank accounts, one called PPP, one called economic injury. What I will do is that I will then reimburse myself into the operating account for qualified expenses. And I will keep a detailed record with backups for those expenses that I'm reimbursing myself for, so that when it comes time for forgiveness, or it comes time for qualifying loans, or what I need it for, I have clear records that show what I did with the money, how I paid it, and what I'm going to do to reduce the loan balance when I'm able to do this. One of the things I wanted to say this again is, remember, number one, remember, these are loans, not free money. So pay attention to your calculations, pay attention to what you're using money for, keep good records, and make sure that when it comes time for the loan reduction, you are you're able to provide that information in an orderly fashion. With that being said, we are not sure what they're asking. And then the other thing that I wanted to, how do we do this? Stop doing share. Yep. So I wanted you guys to look at this tile. I'm leaving it up there so you guys can have it. You'll be in the video for a few minutes. And then the big thing is, while I'm saying that, I'm putting up these slides, I want you guys to know if you missed anything or you're not clear about anything, we will be reposting this video for everybody so they can go back and check answers or do things as we go. One of the next things that I want to do is this. Patrick, what are the big questions or what are the things that we're worried about as accountants or as anybody else who are applying for these loans? What traps do we need to watch out for, things like that?
So the things that we don't really know yet. And the problem is a lot of these things, they're putting out regulation, and a lot of the regulation that they're putting out is contradictory. You read the document that they put out on the PPP loans last night and find 3 or 4 cases where they're straight up contradicting themselves on what they're asking for, how they're going to calculate it. And that is a big concern. That's why we're stressing keeping everything separate, taking heightened care with your documentation, because when this goes through at the end of the day and they say, okay, we're looking at your forgiveness, then that's when we don't want to run into problems, because it's too late to fix it at that point. Some of the things that we are looking at that we don't know the answers to yet. How exactly do we calculate the average costs for payroll for the PPP loans? They want you to have a calculation for the average cost. That's how they're going to determine your loan balance. That's how they're going to determine your loan forgiveness. And we're not entirely sure how they're calculating that yet. There are some payroll taxes that seem to indicate you don't get to count. Doesn't make a whole lot of sense the way they're doing it as written. So we're hoping they will provide some more clarity on that. But as of right now, if we do it strictly as written, it's a little bit vague. We don't know for sure what documents are going to be required by banks for this application process. We've talked to a number of banks. Each bank is saying something different. Some banks are saying we're not touching it until we know more. So we sent out a couple of days ago a list of what we expect that you will need to provide. It's a very comprehensive list. It may be more than you need, but for now, if you're looking at applying for this loan, refer to that list and be pulling those things together. We don't know how sole proprietors and partnerships are going to apply. We know they can apply if they don't have employees. We don't know how things like the forgiveness are going to be calculated for them. The SBA has pushed that back a few days. They have, I believe, 5 more days to give us the regulation on that before sole proprietors are even allowed to start applying. At this rate, I would expect 11th hour, if at all, is when we're going to get that guidance. And then lastly, how the loan forgiveness is going to work. We know it's based off of the 8 weeks after you get the loan, and that's about it. We don't know how they're going to evaluate you, what they're going to evaluate in terms of documentation, and how they're going to calculate it, as the guidance they provided so far is contradictory. And we don't know how long they're going to take to do that after the 8 weeks is up. So these are the big things, and there's tons of small things out there too, but these are the big concerns that we have at this point going into this, with going ahead and jumping into these loans. They are loans, as Jatin said, and if they're not handled properly, you will have to pay them back, and that could be a nasty cash flow crunch in 6 months when you might still at least need it if this is still going on.
One thing he asked about the loans that people are asking is, we do know 2 things. They just got released. Number one, the PPP loan will be a 1% loan, and it will be required to be paid back in 24 months. So everything people have read saying, oh, you have 10 years to pay it back, the original code was written up to 10 years. If you read the latest guidance, they're saying 2. None of this has been put final, but last night it's 7. that's when they said, okay, this is what we're reflecting. One of the things I want to do is I'm going to go back into the file share real quick with you guys. And I just want to kind of show you one thing that was on our website that I wanted to point out. A lot of this information that we're sharing about this is, if you go to the PPP loan website, pay attention to this and stay up. About 2 days ago, there was only 4 documents. Today, there's 6. This interim financial rule is about 30 pages. It's terrible reading, but some of the points will be clear. We're showing you this stuff on the website so that as things happen, you guys have more information at your fingertips. What we're going to do is we're going to go ahead and open up for questions now so that we can answer whatever you have. So go ahead and submit your questions, and then we'll go from there. We have a moderator kind of going through this question so that way, if questions have been answered, then we won't duplicate, but we'll also keep it kind of flowing. So what do you got for us, Robin?
Nothing so far.
Okay.
No questions so far.
So no questions so far, but that's fine. You said that you have to have employees have PPP. Yeah, that's a good point. Patrick and I have gone back and forth about this. We say that, and let me take a step back. Sole proprietor and partnerships, I think what they're going to allow you to do is take 12 months worth of your income and apply for the loan, and potentially that's where we haven't figured stuff out about the calculation. How are we going to do the forgiveness? So those are things that I think if you look at that last site that I went, told you that draft revision, they're trying to work out, and they basically said sole proprietor and partnerships hold off. So good question, and
If I can jump in, my expectation is they're going to say that you are like employees because you're paying self-employment tax on your individual tax returns. And so so yes, you require to have employees, and they're going to say for purposes of this calculation, your income is treated as they have to write them.
good point. So our staff just came in and said you guys are calling. I'm sorry, we're not going to allow people to unmute and ask their questions. Please submit them through the chat, or otherwise we'll unmute everybody and it'll be chaos.
Yeah, that's too much background noise.
There you go. All right, sorry about that.
Apologies for that.
Okay. Yep.
Does subcontracted labor count as employee?
No, they specifically said that in the guidance last night. Subcontractors do not count as employees. They have to apply for it on their own.
What will they require if you didn't have payroll January through March 2019, but have it?
Oh, perfect. On that guidance, the 11-page guide that I told you for owners, there is a section, the second part of it talks about businesses and time periods of where you were in business and when. So there'll just be a different time frame and a different calculation for what you use to calculate the payroll portion and the loan value. And then obviously the payback forgiveness is going to be 8 weeks from when you get the money.
When calculating payroll expenses, is it gross or net?
That's one of those they haven't given us the.
Let me repeat the question, and if you forget to do that, I will do that. They said what the question was is, how do you calculate payroll cost to determine the loan value?
Yeah, and they're not entirely clear on the guidance on that. So it's going to start from gross pay, but then some of the things you deduct will not be allowed. Some of the things you deduct will be allowed. They've specifically said things like health insurance, 401k match are allowed. The taxes, that's where we're getting contradictory or unclear information. Conservatively, they're not allowing it. Your Social Security and your federal and state withholdings.
Yeah, that's a big topic of discussion, because this is what Patrick and I are telling people, and one of the things we're going to talk to people about is we're doing this seminar, and the biggest thing we can tell you as a firm, and if you're clients of ours, go ahead and start getting all the documentation ready for everything for the loan process. We will help you calculate the payroll taxes when we have better guidance. But as you have that information and as you gather it, if you need help, then we ask you call us, but please make sure you guys have all your other documentation ready for whoever your lender or whatever your lender is requesting.
Can we use 1099 payments for support services in the payroll calculations? And what about shareholder distributions?
No and no on both counts. That's the same as the.
Well, hold on.
Or
Make sure
similar to
Well, restate the question just in case I couldn't hear what Robin said.
So can we use 1099 payments for support services in the payroll calculations? And what about shareholder distributions?
Okay, 1099 payments in the payroll calculation, no. They are not allowed, they have to apply on their own. You're basically, good way to think of it, if you're withholding taxes on them, you can include them. If you're not withholding taxes, you can't. Shareholder distributions in the payroll calculation, same thing. Not withholding taxes, doesn't count.
And remember, all these things that we're saying no to are for the PPP program, because those things are based on payroll. When you think about payroll, think about I'm cutting somebody a check, I'm taking taxes, I'm matching them, I'm doing the 401k, I'm doing the health insurance, all the other obligations you have as a business owner for employees. Okay, but great question. That's been a question that everyone's asked, and we actually took it off the list this morning because they had guidance on it last night. Oh, what you got next?
With only 2 of us as employees, would we be better off applying for unemployment instead of a PPP loan?
Good question. With 2 people, it all depends on, again, are you going to stay open? Because if you're open and you're working, you don't get unemployment. If you close down and you get unemployment, then you don't have a chance for the forgiveness. So those are questions that we just clearly can't answer, and that's why we say go read into the decisions of, are you applying for a loan? And I hate to say this, but are you looking for free money? If you're looking for free money, be very cautious on how you apply for the loans, because I hope no one sends this to their banker, but your banker is going to sign off on the loan. But what happens when it's time for forgiveness and paying it back? Your banker is not going to forgive the loan, and your bank is not going to pay your loan for you. They're going to say, oh, well, this is what the guidance says, and I'm sorry, we can't write this portion of the loan off, and you owe it. So be cautious with that, but great question, because people are asking about the unemployment.
And if I can jump in on that, that is probably the kind of situation where you need to look not at the PPP loan, but at the economic injury disaster loan for your operating expenses.
Yeah, good point. Remember, guys, I think everybody's looking to where to go for the PPP loan because you can write it off, but it comes with a lot of restrictions. If you're not sure about the restrictions and you need a loan to get you through the times of this so you can recover, maybe the economic injury disaster loan is your best bet. What else do we have?
Yeah. Do your 2018 tax returns have to be filed to be eligible for PPP loan?
Okay, so do your 18 taxes have to be filed to be eligible for the PPP loan? Probably. That's one of the things they haven't specifically said, but my expectation would be that's something your banker is going to ask for in order to process the loan. But it really depends on them. If your banker doesn't ask for it, if you look at the application, there's nothing on the government form that I've seen so far that says you have to certify you're current with your income taxes. So I would recommend it.
Yeah.
Yes.
Let me remind you something. This is what people aren't telling you, and this is what people don't understand in general business owners. The bank is giving you the loan. The SBA is just backing the bank. So you're not getting money from the government. You're getting money from the bank. And you're going to be required to pay the bank back, or the bank is going to reduce your loan. And then if you don't pay your loan, then the bank is able to go back to SBA. So it's not the government giving you money. It's your banker. Your banker is going to have to do certain things to make sure your credit worthiness and your cause is correct. So when you guys ask us questions on how are they going to determine, what are they going to do, what do we need documentation wise? For every one of you guys that have been receiving our emails, what we did for that list is we got a comprehensive list from all of you guys that have been sending us things and what your banker's been asking for. So thank you, but that's the most comprehensive list we have. So start gathering that information so you're ready. And actually work with your bankers to see what they're asking for. Yep, go ahead.
As a business owner with no employees and paying myself with a TRA rather than a W-2, would I be ineligible for the PPP and better off with EITL?
Okay, so let's go back. Remember we talked about sole proprietorship, and 3 days or 4 days from now, they're going to open up the loan package for you guys. I think that's a question that has to be pushed back for that. I don't think there's any harm in applying for the economic.
No, you can apply for both. So if you're in that situation and you need the money and your business is being impacted, go ahead and apply for the economic injury disaster loan now. That's what it's there for. And then the PPP loan, we'll see what they say, because they still haven't released that guidance for self-employed individuals without employees.
Yeah, the only thing I'd be careful about is this: if you receive the money before you apply for the PPP loan, which I don't think you will because you'll be able to apply for it in 5 days, that loan can get rolled into the PPP loan. But I think for the timing part of what you guys are talking about, I think you have to.
Just a clarification, I believe that's only loans that existed as of yesterday. Ones you get subsequent don't roll.
Right. So but I would just tell you to be careful on that.
Yeah. They might change it.
Right.
What about IRA contributions?
Oh, good point. So a lot of what we're doing today is talking about the loans. The CARES Act, if you go to the CARES webpage, there's a great contact. Hold me, let me see if I can share that screen with you. Oh, perfect. Right here, for all the individuals, go down to our website and go to this individuals page, because we actually have a summary of what we think the key parts of individual benefits are. And that also breaks out the stimulus, IRAs, and any other benefits they're giving individuals during this hard time. But good question, thank you.
Can you use the income from taxes as payroll?
Can you use the income from taxes
as payroll?
From your tax return, perhaps?
We're not sure what that's
asking. If you would restate that question and resubmit, please. Not quite sure what you mean.
Yeah, follow up with us. That's unclear.
Do you have clearer guidance on if an employee left prior to applying for the loan, how much of the forgiveness would be for?
That's a good question, and that's what we're talking about. One of the things we talked about is pay periods, right? As you apply for these things, what is your banker going to judge this by? I mean, think about it. If your banker asks for 2019 numbers, then it really doesn't matter. But if you ask for the last 12 months, then it's going to matter. What I will tell you is this: the minute you get the PPP loan, you better get everybody off of unemployment.
Right. Do we run payroll as usual, and can we include bonuses?
That's a good question. TBA. We are wondering if you guys are a lot of you guys are S corps and you're paying yourselves, and let's say you don't pay yourself $100,000. Does that mean it gives you the free reign to bonus yourself out next week so you don't get more forgiveness? I haven't seen that you can't, but I also think that they're not final, so they're probably going to close that loophole. But just pay attention to that.
If you have an LLC, but the only payroll is for an owner, can you apply for the PPP now, or must we wait until it is released for sole proprietors?
So I assume if you're an LLC filing as an S corporation in that case, since if you're just a straight LLC filing as Schedule C, you shouldn't be paying yourself payroll, is the only owner. I believe, yes, you can go ahead now, because if you're applying for a corporation, S corporation is a distinct entity. So you are treated as an employee of that corporation. The fact that you own it is relatively incidental in that case. So you would go ahead and apply for it now. The question becomes, in that situation, is it something where you're going to get enough benefit to be worth going through the hassle?
Is it okay if we skip to a question? Because I think this is important.
Sure.
John W. Yep, that's perfect.
I'm not eager to apply for the PPP, but there is tremendous pressure from several of the advisors in my field to apply now because there is a finite amount of money. Do you see tremendous harm in waiting to apply for the PPP loan?
Discuss what you talked about today with the big banks and what happened in the news.
Sure. So let's start with the basics of it. There is a finite amount of money in this pool where theoretically, if they give out all the loans, it's expired and okay, no one else can get it. The catch on not running in, just jumping in with both feet right now is, as we're hearing, a lot of the larger banks are very concerned about this program and about the viability of the loans. So they are not necessarily throwing loans out right now because there are all these questions. Some banks do seem to be jumping in with both feet, but some of the larger ones we've been talking to, at least the individual lenders, they're holding back. They're saying, we're not processing right now. We've got too many questions. I've heard one or two big banks might just drop out of the program altogether and say, we're not doing these loans. I can't confirm that, so I'm not naming any names. But I've heard rumors that that could happen. And if a big bank jumps out, they could potentially have a cascade effect of a lot of banks jumping out because they're scared of the volatility of these loans and being paid back. So to answer the question, your banks may not even be ready to offer them. So I would get your information ready if this is something you think you need. Go ahead and be ready to go at a moment's notice. But I don't think you necessarily need to try to jump in the door right now because it might not even be open.
You know, one of the things I want to say about this is the basics behind this is you will get 2.5 months worth of payroll cost. One of the big things we're going to say again is how are you going to calculate that? And if we don't know the time frame and we don't know what's included in payroll cost, how are you going to determine that number to apply? So that's the number one question I would ask my bank is explain to me how I'm supposed to calculate my payroll cost. Because once they explain that to you, what's included, what's not, then I would trust my lender. That's just a, what do you want to call that, Patrick? A good practice, a disclaimer that we're taking. If the bank of Patel and Chester was open, I would not be telling people I will take the brute end of this until I figure out that calculation. And trust me, guys, we're here for you to help you with that calculation. The problem is we don't know for definite how to get there. And once we do, we will definitely send that information out.
Can we use this year's payroll figures to calculate payroll expenses rather than last year as the employee has received a significant raise?
Yeah, perfect.
So
You want to say that one time? She said, can we use this year? Do we get a choice of what payroll numbers to use? This year, last year, trailing 12 months? Go ahead, Patrick. That's what we're asking.
Well, it's one of those I'm uncertain about from the new guidance. My understanding is they're looking at either last calendar year, so it would be total of 2019, or trailing 12 months as of when you apply. The new guidance refers to each once, so it's not definite which one you're supposed to use in my mind yet. Obviously, in your situation, trailing 12 months would be preferable because then you're factoring in that raise, but I don't know if that's what they're going to accept.
Okay, we'll take a few more questions because we want to make sure that we're not running too long into this and we can wrap it up. So we'll take about, what do you think? Three more questions.
So does it matter which bank you go to? Do you need to use the bank where your business account is located?
Oh, we'll allow one more after that. That's easy. No, you
Okay.
need to make sure that your lender is SBA certified.
So yes, you need to make sure your lender does SBA loans because these are SBA loans. What I've been hearing from a lot of bankers as they're preparing for this is if you are not banking with them, you will have either lower priority or they're just plain not going to service non-compliance. I've had a couple tell me that if you don't have an account with them already, you're out of luck. They're just not going to deal with it because they're going to be overwhelmed. So check with your banker, make sure they can do it. If they can't, that's probably something you need to start trying to find someone now who is at least taking on new clients.
I believe one of those links has a list of the top 100 SBA bankers on our website. So just kind of peruse around through there, you should be able to find it.
And that is something we're trying to pull together, a list of bankers that are accepting new loans. It's iffy right now. They're mostly not committing at this point. But as we get names that are doing it, if you're running into trouble, we can try to help you find someone.
We may have answered this, but it's coming in a different
Sure.
form. Do we do payroll as usual with IRA and insurance deductions? We currently have an SBA loan and they are freezing our payments for the next 6 months.
Yes, that's easy. Business as usual. If you are planning on applying for the PPP loan, the goal, again, this is a common theme I'm going to keep telling you. If you plan on applying for the PPP loan, you need to run your business as though you were fully open. Whether you are not fully open, whether you're part-time, lower employees, lower hours, everybody needs to be paid as though they were full-time.
If I could jump on the second part of that, because that is something that came up last night, and we're cautioned that we're still learning more about it. You have an existing SBA loan. If you apply for the PPP loan, you will at least have the option of rolling that SBA loan into the PPP loan. I'm not sure if they're going to make that mandatory, that if you have a pre-existing loan, you must roll it, or if they're going to say, hey, you have the option to roll it. But that's going to be something to be very careful about, because that could have implications on your existing SBA. And I just don't know the answer to that yet.
For the EIDL only, can you count 1099 subcontractors as employees?
So yeah, remember, EIDL loans, economic injury disaster loans, they're not tied to payroll. So for instance, imagine I have a bunch of investment properties that I rent out, or I have a shopping center that I rent out. I can apply for that loan because I believe I'm going to have economic distress because my renters aren't going to pay me. So it's not tied to loans.
Yeah, and just to add on that, when you fill out that application, it doesn't ask you for anything payroll related. It asks you for your total operating costs. So you're just going to throw all that in one big pot and submit that on the form. It's completely not tied to payroll.
Oh yeah, by the way, you don't get to write down a number on the economic disaster loan to say, hey, this is how much I want to borrow. So
I'd like the full $3 million.
Yeah, so that's not going to happen.
Yeah.
So you do count your 1099 employees.
Yes.
Yeah,
you count everything you spend operating on the EIDL.
Right.
Employees, 1099, utilities, rent,
there's
supplies, everything.
Right, and again, keep track and make sure that you are spending money on things that are allowed based upon each loan independently of each other.
And that's where you can potentially get in trouble with the EIDL. If you take 100% of those expenses, including all of your payroll, and put it into the EIDL application, you might not be able to qualify for the PPP loan because you've already got a loan based on your employee costs. So you want to be careful about applying for all your business expenses for the EIDL and then trying to apply with the payroll costs for the PPP. That's the double dipping we referred to in the beginning that they don't allow.
So I see the last two chats that I can very easily answer.
And then we'll wrap it up.
Yeah, and then we're going to wrap it up. It basically asks, for the number of employees, should I include 1099s? The answer is no for the PPP loan. And then the second thing I don't know who the comment was from. So these loans are basically for cash flow strapped businesses. Yes. And remember, the forgiveness or the reduction of these loans are not 100% guaranteed right now. So that is the biggest thing I can caution everyone about, is understand that you may be paying these loans back. So be careful how you spend it and where you put it, and how you use it for your business. Patrick, is there any closing statements that you have?
I don't think so. Just to reinforce, I know we've hit it a few times, hammered it down. Just remember, these are loans at the end of the day. So they are to help you get through this. If your business is shut down, that's what the unemployment is for. If your business is still going on and still trying to operate, that's where these loans are really for. And just don't expect forgiveness. Be ready to have to pay it back if you have to, because who knows what they're going to come out with guidance-wise. So if you prepare for the worst, hope for the best kind of situation.
Right, and I do, the one thing I do want to say is this. I think if you read the intent of this plan, is they really do want to give small business owners money to keep their workers employed. And as long as you keep your workers employed, I do believe that you're going to get some portion of it back. Whether you get all of it back, whether you get all of it back plus more because that's just the way your business operates, those are fine. The one thing, the reason why I think we're cautioning you today from the forgiveness part is because of the calculations. And I don't want to disencourage anybody from applying. What I want them to understand is, as we get more information and as we're able to get the calculations, then we can tell you all the pitfalls or things that you need to watch out for so that the loan is forgiven and to what extent. We appreciate everybody joining in. We should be sending out an email to you guys with a recording of of today's broadcast after we clean it up a little bit. And then feel free to please email us questions so we can respond, because every phone call is taking 20-30 minutes to help out with these answers.
Yeah.
We've been very repetitive.
If we didn't get to your question, yes, apologize. Please do email us and we'll get to that as soon as we can. But again, yes, thank you for joining us. Hope it was informative and helpful. And keep an eye on our website, because we'll be continuing to update it as we get information.
And Robin, thank you so much for helping us get through this meeting.
Thank you, everyone. Have a good afternoon.
Yep. Enjoy the weekend.